For millions of people, reaching the end of the month with almost nothing left in the bank has quietly become normal. Paychecks come in, bills immediately take most of the money, and whatever remains often disappears into rising living costs, debt payments, subscriptions, interest, and everyday survival expenses. The frightening part is that modern debt systems are designed to keep money constantly moving out just as fast as it comes in. Today we will talk about the dark truth about $0 bank accounts and modern debt, so before we get started, make sure to hit that like button, also subscribe to my channel. 10. Most people think having a $0 bank balance means you're just broke. When people see a zero balance in a bank account, they usually interpret it in a simple way. No money left, poor financial situation, or temporary struggle. But in today's financial system, a $0 balance can mean very different things, depending on what is happening behind the scenes. Some people live paycheck to paycheck with zero buffer and increasing debt. Others intentionally keep minimal balances while relying on credit systems, investment accounts, or automated cash flow structures. The reality is that a zero balance is not always about poverty. It is often about how deeply someone is tied to modern financial systems that operate beyond visible cash. 9. Modern life is built around invisible money flow, not cash holding. One of the biggest changes in the financial world is that money no longer sits in one place like it used to. Income, expenses, subscriptions, loans, taxes, and automated payments all move continuously through digital systems. Most people don't hold money for long anymore. It flows in and flows out almost immediately. This creates the illusion that people are always low on money, even when their total financial activity is much larger than their visible bank balance. The modern economy runs on movement, not storage, and that shift changes how financial stress feels for millions of people. 8. Debt has quietly become a parallel financial system. One of the darkest realities of modern finance is that debt is no longer just a tool. It has become a permanent structure in many people's lives. Credit cards, student loans, car financing, mortgages, and buy now, pay later systems create an invisible layer of financial obligations that exist alongside regular income. Many people are not just managing money, they are managing repayment cycles that stretch years or even decades. This means a $0 bank balance often does not represent financial freedom. It can represent ongoing obligations that continue regardless of income changes. 7. The illusion of stability can hide growing financial pressure. Many people appear financially stable on the surface because they are still paying bills on time and maintaining normal consumption habits. But behind that stability, debt levels may be increasing, savings may be shrinking, and financial pressure may be quietly building. Because modern financial systems allow people to borrow easily, it becomes possible to maintain a lifestyle that is not fully supported by actual income. This creates a dangerous gap between appearance and reality, where financial stress builds slowly, while daily life continues as if everything is normal. 6. Subscription systems keep money moving out automatically. Another hidden force in modern debt and low-balance lifestyles is recurring spending. Subscriptions, streaming platforms, software services, memberships, delivery apps, insurance plans, and automated payments remove friction from spending completely. Money leaves accounts quietly in the background, without requiring active decisions each time. Over months and years, these small automatic withdrawals accumulate into significant financial leakage. Many people don't feel these losses immediately, because each individual payment seems small, but together they create constant downward pressure on bank balances. 5. Credit makes spending feel smaller than it really is. Credit systems fundamentally change how people experience money. When purchases are broken into monthly payments, the real cost becomes psychologically disconnected from the actual value. A large purchase feels manageable when spread across time, even if the total cost is significantly higher due to interest or fees. This separation between consumption and payment makes it easier to overspend without realizing the long-term impact. In many cases, people are not reacting to prices, they are reacting to monthly payment sizes. 4. Inflation slowly pushes people closer to financial edge without warning. Inflation plays a silent but powerful role in modern financial stress. As the cost of living increases over time, the same income covers less and less. People often adjust gradually without noticing the long-term trend. They cut small expenses, shift habits, or take on additional work just to maintain stability. This slow adjustment process makes financial pressure feel normal rather than alarming. Over time, inflation can turn once comfortable financial situations into constant balancing acts, without any dramatic moment of collapse. 3. Debt creates a future income claim on today's money. One of the most important but least understood aspects of debt is that it is essentially a claim on future income. When someone borrows money today, a portion of their future earnings is already allocated toward repayment before they even receive it. This means a $0 bank balance does not represent a fresh start. It often represents income that has already been partially assigned to future obligations. This creates a long-term limitation on financial flexibility, because future earnings are not fully available for saving, investing, or building wealth. 2. The system rewards constant participation, not financial rest. Modern financial systems are designed around continuous participation. People are encouraged to borrow, spend, subscribe, invest, and consume in ongoing cycles. Money is expected to move constantly through the system rather than sit idle. This structure benefits financial institutions, lenders, and businesses, because money flow generates fees, interest, and revenue. For individuals, however, it can create a situation where financial rest becomes difficult. A zero balance is often not a pause, it is part of a cycle that keeps money moving out as quickly as it comes in. 1. The real truth. A $0 bank balance is not always the problem. The real issue is control over the system behind it. The deeper truth about modern debt and zero balances is not simply about having no money in an account. It is about whether someone controls their financial system or is controlled by it. Because the truth is simple: debt obligations, automatic spending systems, inflation, credit structures, and recurring payments can shape financial reality more than visible cash balances ever reveal. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.